Hi there, welcome to GrainTV. I'm Kevin McNew. Today is Wednesday, January 13th, and we have the post day of trading after USDA's barrage of data yesterday. Let's take a look at Grain Hedge's trading platform and see where we closed. In Chicago, corn up 1.5 cents, beans leading to the upside 5.5 cents, and wheat giving back some of yesterday's gains, losing 3.25 cents. Most of the day was just kind of a little bit of short covering continuing in beans, a little bit in corn, but wheat mostly just sort of marching lower. There's very little new news out today. We did have some news out of France that their stocks of soft white wheat are going to be higher than what was originally expected, originally at 5.2 million metric tons last month and now pegged at 5.8 million metric tons. The other news out today, ethanol production was up 7,000 barrels a day. But overall, this market is still trying to figure out, do we see higher prices in this short covering rally, or are we going to continue to move lower and retest the lows that were established before this crop report? Let's look at today's trading action, and to do that we're going to turn to the Grain Edge trading portal, where you, if you're a client, can see these charts that can slice and dice the trading platform or trading data up into various intervals. And we're going to look today at a 20-minute bar on March beans, and this covers today's trading as well as yesterday's trading around the crop report. And I want you to focus in on the crop report interval. That's obviously the big spike up, followed with a little follow through up to the high of 881. So we established that yesterday, and that's the mark I think we're sort of looking for to clear to get more short covering. We did have, after yesterday's close, we did have a soft opening in the overnight session. It kind of, danced around at sort of unchanged levels to slightly weaker. But as we started the day in the normal day session, we started to get some action to the upside, and we just kind of grinded higher, eventually getting up to around that 881 mark, but closing the day about 2 cents below it. In corn, it's been not quite as optimistic. We have not been able to clear the hurdle that was established at that crop report announcement of 364. In fact, we didn't even come close to it today. The best we could come was 361, and that was not at the end of the day. That was more in the last hour or hour and a half of trading, and we closed sort of where we started the day, around 359 on March corn. So what's my take on this? My take on this is that we might continue to see a little bit more upside here. I don't think it's going to be a huge upside. We've been talking to clients today that don't get in love with this rally, that this rally is really just a short covering phenomenon as a result of the large shorts that were in the market. And we didn't get any sort of really negative news out of USDA. We only got sort of confirmation of the bad news that we've been trading for quite some time. So do we go substantially higher? I don't think so. I think it is just going to be a matter of how much fuel will the short covering rally give us. And so keep these numbers in mind. Keep that 364 in mind for corn, that 881 in mind for March beans, which we are much closer to. Can we clear those hurdles in the next day and maybe continue to move higher in the rest of the week? That's all we got for today. Have a great night and trade safely.